This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for opening losses after the S&P 500 slips. Investors awaiting the U.S. jobs report out later as the Fed chair says inflation risks have come down. Apple said to be in talks to buy chips made by Chinese companies on the Pentagon blacklist as it battles the global memory shortage. Plus, we're live at one of Japan's biggest startup conferences, IVS 2026, talking to investors and innovators about the AI frenzy.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia, and it is all about that AI frenzy and the sustainability of this rally that we continue to see. It does look like a day where we might see a little bit more restraint. This, as we see stocks across Asia looking like this, potentially we see a little bit more of a muted session. The sell-off in US chip makers really weighing on broader sentiment. We're also, as Shery mentioned, looking at those fresh remarks from Fed Chair Warsh as well. These comments around inflation expectations having moderated over the past month, reiterating the Fed's commitment to restoring price stability, but really whether or not that kind of changes the direction in terms of how much urgency there is for policymakers to raise interest rate. And the answer to that at the moment seems to be not as much as previously priced in. So this is a picture as we look ahead to the open in about an hour or so. Kospi futures looking like we'll see quite a sell-off today, 3.7% to the downside. You're seeing US futures, they're pretty flat at the moment. Dollar yen still that one to watch as we continue to gauge for signs of potential intervention. 162.54 is where we're trading. That worst case scenario now being plotted by traders in terms of whether this could turn into a real currency crisis. But we do know a lot of communications from the FX chief in Japan with the US side as well when it comes to the intervention impact over global foreign exchange. Let's switch out the boards and take a quick look at the picture when it comes to commodities, and oil is in focus. With the extension of that decline as barrels continue to flow through the Strait of Hormuz, despite, of course, great uncertainty over where we're at with these peace talks. But a third day of declines there for crude, climbing volumes really going through the Strait of Hormuz now. Some progress of these indirect talks as well, as we're seeing from the US side saying that this sort of underscores Iran's limited ability to halt shipping, despite, of course, the Iranian side saying that they want to maintain control or management of the Strait. Let's get back to the central bank outlook in terms of particularly what that inflation outlook is with that easing or energy crisis. And Fed Chair Kevin Warsh told the ECB forum in Portugal that inflation risks have eased in recent weeks. He's also doubled down on the message from his first media conference in charge of the central bank that price stability is the key goal.
We're taking seriously the reform objective. And we're going to deliver on the high promise that Congress gave us to deliver price stability in the context of our dual mandate. And when we do that, we don't have to worry about politics. We don't have to worry about judicial intervention. We get to look in front of us because it's a challenging step.
Let's get a read on the market reaction to Warsh's comments. Our markets reporter Anthony Stevens joins us now. So, Anthony, does this potentially change market expectations dramatically when it comes to Fed expectations?
It's a finely balanced statement. You know, the market has been pricing in collapsing inflation expectations for a while now. In the last couple of months, one-year inflation swaps in the U.S. has closely followed the move in oil sharply down. So inflation is less of a concern for markets now. But he also maintains his stance that he wants to control inflation. And the bond market did react to that. You did see the bond market do a big U-turn back to flat because not much was said that the bond market needs to care about. Bond volatility is also very low. So in terms of the feed through into equities, from Warsh's statement, it was broadly positive. You did see kind of non-tech do really well, but the much bigger story overnight in the US was on the tech sell-off.
And let's bring in Bloomberg's Ruth Carson as well, because as Heidi mentioned earlier, it was really about the Japanese yen and those latest comments that we got from the chief currency official here in Japan. Anything that we can take away from his communication that authorities are ready to act?
I think it's fair to say that traders are very much still on alert when it comes to intervention. But the question is, what's more lucrative here? Continuing to sell the yen or, you know, take your profits, wait, and then see where things go if intervention occurs. Right now, absolutely, those comments do carry a lot of weight. They're seen as a warning shot. But let's look at where dollar yen is still trading. It's above 162. And if you look at what options markets are signaling, for example, option FX traders are saying 170 is a 40% chance by the first quarter of next year. And in fact, we have a story out based on reporting by talking to hedge funds and investors around the world. Those that are game planning the worst case scenario for the yen, they're talking about 200 and beyond. So absolutely, these comments do carry some weight, but the long-term trajectory, people are still expecting a very weak yen.
Anthony, not just the yen, right? I mean, we have seen this downside pressure on all Asian currencies, especially when you have this U.S. dollar exceptionalism playing out and just trying to figure out what the Fed will do next. We do have the labor jobs data coming up next. How consequential will the Fed's decision in July be?
Yeah, the strength in the U.S. labor market is a macro pressure on EM. We have the non-farm payroll data, but also importantly, we have a shortened week with the U.S. going on holiday on Friday. So it's a very important risk-taking, decision-making process data point at the back end of the week. So it'll be very interesting to see how EM assets react to that. It's also important to mention that EM assets, EM FX in particular, is very heavily skewed by the selling in the U.S. in the Asian tech trade. So Taiwan dollar, Korean won has been pressured by tech outflows. And we might see more of that today, given the tech sell-off in the US. So this interplay of equity kind of pressure and a strong dollar is the key determinant of EM FX strength or weakness in the second half of this year.
Ruth, when it comes to how much further we could see this trajectory for the yen, I suppose some of that certainly depends on whether we see kind of a fundamental shift in Fed expectations and the impact there. But are we seeing some targets already being set up by traders in terms of what the next levels to be breached could be?
Absolutely. Things can move very fast. Dollar yen has been grinding higher, but let's look at positioning for a moment. We have a function on the terminal FXFM Go, and if you look at what options markets are signaling to us, 170, 180, definitely a possibility, you know, over the coming months and into next year. And let's also look at what the CFTC data is showing us. Hedge funds are heavily skewed now to shorting the yen. Now, of course, there is a risk to a snapback because of intervention, but generally it's a good litmus test as to what appetite there is to short the yen. And absolutely, it's still incredibly bearish. Hedge funds are the most short on the yen since about 2017. And yes, that means losses can still continue. And remember, markets do love their big round numbers. Could 170 be next? Absolutely, potentially.
Anthony, how does this kind of, I guess, fit into the broader picture for some of these economies that have the weakness in terms of South Korea's won? We've been talking about the yen, of course, but these are also two of the biggest beneficiaries of the AI boom in Asia.
Yeah, and this speaks to how much of a problem they think a weak currency is, right? At the moment, they're benefiting massively from these tech exports. So do they really want to step in front of the weakness on the won and the yen? That is a question the market is asking in terms of how much conviction the BOJ or the BOK has on increasing rates to get ahead of this FX weakness. Or do they want to let it run a little bit to help exports? So that is kind of a geopolitical and political economy question that both these economies need to answer. In the case of the won, equity pressure is also a very big deal. Foreign outflows are at $95 billion coming into today, with futures indicating down 3.7%. So that equity outflow pressure on the won is also something worth watching. And that is really out of the BOK's control. Even though the country is benefiting from a massive export boom, it has FX weakness. That is a very unusual situation that speaks to kind of the unique macro challenges that the AI trade is causing for EM assets.
Anthony, when it comes to the macro challenges, how much are we factoring in what's happening around Iran and oil prices, especially given that we continue to see the negotiations just dragging and dragging?
Yeah, I think the market has adjusted to the fact that oil is flowing while they are talking. So you see oil kind of break a new technical level on the WTI. It's on the verge of breaking 70 on Brent, and US one-year inflation expectations are taking the ball and running with it very hard. They've fallen off a cliff. US 5-year inflation expectations are also much weaker. So the market has looked through the energy shock because oil has come online very quickly. One very quick thing to note is in the US oil benchmark premium to regional benchmarks has collapsed now into negative, and that is because the US export grade is no longer at a premium. People can get oil from the Gulf again. So in terms of a range of indicators, it looks like the market has looked through the energy crisis. That might be dangerous, but for now that is also the message that EU and US central bankers are speaking to.
Markets reporter Anthony Stevens there, and Chief Asia FX and Rates correspondent Ruth Carson with a deep dive into the market moves. This, of course, as we just had Korea's inflation numbers accelerating slightly. Year on year, we're talking about gains of 3.2% for the month of June. We have seen the consumer price data remaining above the Bank of Korea's 2% target for quite some time. And of course, we had higher oil prices from the Iran war continuing to feed through consumption in South Korea. So that has led to some strong numbers for the month of June. Of course, we are expecting the BOK's policy decision very soon as well on July 16th. We have more ahead on the Asia trade. This is Bloomberg.
We've all looked around and we've seen that prices are too high, and I don't think I'm the only one on this stage that's recommitted to deliver price stability.
I think risks, by the way, that we have to the upside on inflation and to the downside of growth are probably more broadly balanced than they were a few weeks ago as a result of what we're seeing.
It is very frustrating. I was very much of the view that we were going to have inflation back at the 2.0 target, in the late spring.
There's a lot of uncertainty out there. Those risks could shift quickly. And the other part of our message is, if the situation changes, we're prepared. We're prepared to take action.
The heads of major central banks discussing the changing inflation outlook at the ECB's annual forum in Portugal. Let's bring in Jeanette Garretty, chief economist at Robertson Stephens. Jeanette, always good to have you with us. I mean, the markets perceived Fed Chair Warsh's comments as less hawkish at a time when we have markets also thinking higher for longer. What was your takeaway from what he said?
I thought the markets read a lot into not much, meaning I don't know that it's any different than what we heard at the last Fed meeting, which was not too much there either, which is, yes, I'm not happy about the level of inflation right now. Yes, I am committed to a 2% target at some point. No, I'm not going to tell you what I'm going to do. So I don't think that's any news. And the bottom line is the strength of the U.S. economy and what we think tomorrow's numbers on the employment side will continue to signal as the ongoing strength on employment gives the Fed some room to take their time to decide what to do. And that's really not much of a change from 6 months ago, if you think about it. They don't have a whole lot of data on the character of inflation, the degree to which it has become, if you will, systemic, these 3.5–4% numbers, or whether they are, I'll use the most unpopular word in the world, transitory. Nobody's going to use that, but that is indeed the question. The supply side shocks create great problems for the Fed. They know interest rates can act on the demand side. They're not sure entirely that that's the warranted action. And I hasten to mention, by the way, something everybody's forgot. He wants to shrink the balance sheet of the Fed. And that itself is a tightening of monetary policy.
Yeah, I mean, that was a clear commitment and signaling that he gave at Sintra as well. When it comes to the disinflation trends that we're seeing, we have oil prices now retreating. We have manufacturing activity data that also showed input costs were easing. How convinced are you that this disinflationary trend could be durable?
Well, meaning the some moderation or some pull down on prices, perhaps, is what you're alluding to. Look, I think we've probably seen peak inflation rate. That's not to say that it isn't true. It definitely is true that there is still price pressures to move, standing there, to move through various sectors of the economy, like agricultural products and groceries and things of that sort. But I think that they will move through in such a way that the likelihood of the next step on inflation rates is probably slightly down. And so if the Fed is looking at it in the same way, they may think, gee, maybe all we need to do is wait a few months and we'll get clarification that that's a trend. And if that's the trend, that's enough. I think the question is it? Because we have seen a trend downwards on inflation rates before, and then you get to 2.8 and something happens and it goes the other way. So I think that's a real risk.
So how important are Thursday's payrolls numbers when it comes to bringing a July move into play?
They're awfully important in terms of the discussion at the board. I don't really think there's a move in place in July. But if the employment numbers are unexpectedly weak, then we have the whole range of debate opened up again, including about cutting, which I don't think anybody wants to focus on right now. They want to say the economy is strong. The question is, do we hold or do we raise? And I think the hold argument will win the day for a couple of meetings.
The World Cup related hiring, the boost in the economy that we're seeing, how temporary is that?
Well, it's got another a while to run, I suppose. It obviously is temporary employment, but the employment picture was strengthening and even possibly accelerating a bit well before the World Cup hiring came into play. So it's going to be in there. It's going to be in there in the numbers, but people will try and look through it. But I don't think it changes the overall character. Right now, we see the data indicates ongoing pressure on certain job categories in technology, but elsewhere in the economy, there's pretty broad-based strength for a level of job creation that is appropriate for our current labor force growth right now, which is probably somewhere between 100 to 120,000 jobs per month.
Jeanette, how do you reconcile these conflicting signals when it comes to the labor economy and at least how Americans perceive the labor market? They don't seem to be that optimistic, but still when it comes to the consumer confidence numbers, they seem to be much more optimistic because of falling oil prices. So this dichotomy, which signal is more important here?
The economics profession will tell you that they've never been able to get much of a statistical relationship between consumer spending and the answers in any consumer confidence surveys. It does not mean that those messages from the surveys are unimportant, but the American consumer at least has a tendency to spend money if they have it or if they perceive they have it. And so with the unemployment rate low and the job growth there is income growth, and people will therefore continue to spend, and consumer spending is such an important driver for this economy. People are very, very worried about a looming possibility that the job market will change, but that's a very unspecific worry, if you will. And so I think when push comes to shove, if they've got the money, if they've got the income, if they feel their job is going to be there, they'll spend it.
Jeanette Garretty, really appreciate your time as always. Chief economist at Robertson Stephens, as we look ahead, of course, to the Thursday, June payrolls numbers out of the U.S. This is Bloomberg.
Apple is in negotiations to purchase chips from 2 Chinese semiconductor makers on a Pentagon blacklist. The iPhone maker is trying to reduce the impact of a global memory shortage that's forced it to raise prices across its product line. Let's get more details from our China correspondent Min Min Lo now. So, Min Min, is this going to presumably face some opposition and tension from the US government?
Hey, Heidi. Yes, I think Apple is trying to prevent that from happening because technically it doesn't require any approval from the U.S. government to buy from these 2 companies, even though they are on the Pentagon blacklist. It prevents the Department of Defense from buying from those companies, but it doesn't prevent private companies like Apple from doing deals. Now, these 2 companies in question are Changxin Memory Technology and Yangtze Memory Technology. Yangtze Memory Technology, the situation is a little bit complicated because it's on the Pentagon blacklist and it's also on the Commerce Department entity list. Now, this prevents U.S. companies from selling or transferring their technology to Yangtze Memory Technology. But then again, Apple is the one buying from Yangtze rather than the other way around. So again, they're not going to violate any export control rules here. But again, when it comes to these sensitive technology, the U.S. has been trying to reduce reliance on Chinese supply chain. So it is going to get a lot of scrutiny. And that's why we understand that Tim Cook, the CEO, has been personally appealing to the U.S. government. He has been in talks with Scott Bessent, the Treasury Secretary, and they're hoping to use these chips in phones that will be sold specifically in China in the hopes that it will reduce any backlash from the government.
Who are Apple's current suppliers and how bad is the supply squeeze?
So the current suppliers are the big 3, which are Micron, SK Hynix and Samsung. But the problem with these big 3 is that they have been cutting the production of DRAM and NAND chips and shifting production to these HBM chips to serve the data centers because that's a much more lucrative market where they can command a higher premium. And we have seen a severe shortage. It's pushed up prices for Apple's products by $100 to $500 a piece. And that supply constraint is expected to continue, right? Because even though SK Hynix and Samsung are looking to expand capacity, it's still going to take some time for those new plants to come online.
Bloomberg's China correspondent Min Min Lo there. We have more ahead on the Asia trade. We're live from Kyoto at one of Japan's biggest startup summits as the Takaichi government targets trillions of dollars of investments for AI, chips, and other strategic industries. This is Bloomberg.
Take a look at how we're setting up in the market open just about 30 minutes away for Korea, Japan, as well as here in Australia. We are seeing quite a bit of downside as we track that sell-off in US chip makers overnight, the broader weight on sentiment. Investors also taking a look at the fresh path ahead for the Fed, potentially with those remarks from Kevin Warsh on inflation. We're also watching oil, holding on to those declines for New York traded crude there after we see more barrels consistently going through the Strait of Hormuz. The USA saying that there's been some constructive progress being made when it comes to indirect peace talks there. We've got American crude down now for a 3rd day. We're just around that $68 a barrel mark there.
To your point, Heidi, when it came to inflation and those comments by Chair Kevin Warsh. It was interesting that the markets perceived him as being less hawkish than before, or as much as they had anticipated his comments to be. So he's saying now that inflation risks have declined. He repeated his comments to price stability. He also refused to provide forward guidance, not that surprising. This all, of course, ahead of the Thursday June payrolls numbers. Already we saw ADP data showing the best 3-month stretch for private hiring in more than a year. Now, Chair Warsh also had plenty to say about artificial intelligence. Take a listen.
The AI boom is showing itself first and very prominently in the United States. I'd certainly rather have this problem where we have massive capital expenditures instead of thinking years back where we had financial engineering, where we had companies that weren't able to deliver profits, so they would do shareholder buybacks. Well, right now they're investing in the future.
One of Japan's largest startup conferences, VS 2026, is underway in Kyoto this week, bringing together more than 10,000 entrepreneurs, investors and innovators. Our next guest is from a venture capital firm that backs early-stage companies across Asia, the US, Europe and Latin America. Joining us now is Clarey, who's a partner at Headline Growth. Clarey, really great to have you with us. And it is, perhaps underplay, a pretty exciting time to be in this space, particularly in Asia. What are you looking at in terms of the more untapped opportunities, given how far the exuberance and the rallies have run up?
For sure, we're seeing multiple very exciting themes that come with structural benefits, especially in Asia. Areas that include AI infrastructure, energy transition, deep tech, robotics, and consumer. I would say these areas, Asia definitely has a lot of strong advantages versus other regions in the world.
And obviously a lot of them would be the usual suspects, Korea, Japan, Taiwan, for example. But tell us about sort of where you're spreading your attention in terms of some of these key markets.
For sure. Now in the AI era, we're seeing exceptional entrepreneurs starting out from really anywhere in the world. Those markets you mentioned definitely have very strong history, and we're also seeing founders from other markets such as Southeast Asia, other areas, and as well as like Asian founders in other parts of the world. Super exciting time. And these days, exceptional entrepreneurs also have larger and more global ambitions than before. At Headline, with our deep local networks, as well as like the broader global platform, we're super excited to support these founders as they scale to the next phase on the global stage.
How do you feel about valuations at the moment? Because obviously these areas, these sectors are really hot at the moment, right? And there's a lot of fundraising going on, both in public and private markets. Do you think that's impacting how investors are feeling in terms of sentiment?
Yeah, investors are definitely super bullish right now, but we're also seeing a bifurcation in terms of valuation multiples. People are starting to be more thoughtful and rigorous around the potential AI winners versus not. And then you also see the bifurcation increasing across different segments, and areas like memory chips and others have been surging quite a bit, and versus the SaaS apocalypse from several months earlier this year, you see that kind of sustaining at a lower level. So definitely, I would say people have like strong views in certain areas versus others, for sure.
China has perhaps gotten less attention when it comes to its own AI ecosystem, but do you see lots of opportunities in that market?
In China mainland?
Both onshore and offshore.
Great. Yes, definitely. China and offshore has been a critical anchor for a lot of the physical AI value chain. Across areas such as robotics, deep tech, and different areas in smart manufacturing. For sure, we're seeing more efforts there. And I would say, China onshore and offshore has also taken a more pragmatic approach to AI that is more production-oriented, that's more deeply rooted in the hardware ecosystem advantage.
In terms of the vehicles across Asia, the US, Europe, LATAM as well, how distributed is the focus across each of those opportunity markets?
Yes, great question. On the early stage side at Headline, we have 4 different vehicles across Asia, the US, Europe, and LATAM. And we have local offices across Tokyo, Taipei, San Francisco, 5 offices in Europe, as well as Sao Paulo. On the growth stage side, we have one global fund that essentially sits on top of these early stage funds with leverage, insights, and on-the-ground partnerships around the world to back the most promising entrepreneurs during the scale-up phase. So I would say we keep our eyes wide open in terms of looking for opportunities and entrepreneurs around the world, and we help them with their next phase of international expansion.
You've got a lot of players jostling for fundraising at the moment, obviously, with the massive SpaceX IPO. We've talked a little bit about some of the other AI companies that are headed down that path as well, and even additional rounds of fundraising by the likes of Alphabet, right? Is it getting crowded, and are investors becoming a little bit nervous, particularly in light of the previous rounds of sell-offs that we've seen in these markets?
Yes, I would say, the excitement is backed by people's conviction and enthusiasm around growth prospects of these companies. And it's hard to generalize, but, they all have their strong growth drivers that separately have their contributing factors. But yeah, I would say people are having more of a consensus view, more concentrated in several concentrated names today than in the past decades. And you see, again, the strong bifurcation between the winners getting ever bigger and versus the smaller, more point solution companies probably getting less attention.
Clarey, really great to have you with us. Clarey Ju, who's a partner at Headline Growth. We'll have more from the IVS 2026 event in Kyoto in the next hour. We'll be speaking with the MUFG Innovation Partners about where they're placing their bets. We'll also be talking data centers with the founder and the CEO of GMI Cloud. Let's get you caught up with some of the other headlines that we're following this hour. And the US won't renew its trade deal with Canada and Mexico, choosing instead to conduct annual reviews of the USMCA Pact. Trade Representative Jamison Greer told Bloomberg the Trump administration is not prepared to rubber stamp the agreement, which remains in force for another decade. President Trump signed off on the original USMCA in 2020, calling it the best and most important trade deal ever made. President Trump says negotiators have made progress in indirect talks with Iran as both sides try to move past last week's military strikes. Trump's son-in-law, Jared Kushner, and envoy Steve Witkoff were in Qatar this week for discussions on the initial agreement. Vice President J.D. Vance says so-called technical talks are continuing, including on traffic through the Strait of Hormuz. More ahead here in the Asia Trade, this is Bloomberg.
We could see more downside pressure for the South Korea market today. We already had a pullback in the previous session. Of course, we've seen a lot of volatility for the Kospi, especially since we have chips selling off and they're recouping those losses. In the overnight session on Wall Street, we had another down day when it came to the Philadelphia Semiconductor Index. So you're seeing now the SK Hynix futures falling at the moment. We could see a second session of losses today. Samsung Electronics already at the lowest level since May. Now, still, we have to keep the broader picture in mind, right? The Kospi is the world's best performing stock index this year. It's being powered by all of these plays right now under pressure. The AI boom that's backed by chip makers such as Samsung and SK Hynix. Now, this leveraged exchange traded fund tied to SK Hynix could be one reason we're seeing so much volatility. It's grown so large and so fast that analysts say it magnifies swings in both the stock itself, but also the broader Kospi. Asia Equities reporter Charlotte Yang joins us now for more on today's Bloomberg Big Take. Charlotte, so, how did we get to this point where one single stock leverage product could really impact the broader market structure?
Yes, so I think a big reason why this product has garnered so much attention among traders over the past months is because it has grown so fast and so large. So in about 9 months' time, the CSOP 2x SK Hynix leverage product has grown its assets to $13 billion, and that's the largest of its kind in the world globally. And because to deliver its promise to track 2 times the daily performance of SK Hynix shares, the product will have to go into a rebalancing process every afternoon. So they have to buy into the rallies and sell into declines. And this is regardless of any views on the fundamentals. It's just mechanical buying and selling to deliver that promise of 2 times SK Hynix performance. And so this product, and together with its smaller peers, what you see is that on volatile days, these mechanical flows can make up 2/3 of the turnover in SK Hynix shares. Consider how big the company is. So I think this is really quite staggering. So I think the core concern market has right now for this product is that this feedback loop, buying into the updates and selling into declines, could exacerbate if we actually see a sharp downturns in SK Hynix. And that kind of decline won't just stay in SK Hynix because it now makes up 28% of Kospi, and it could quickly filter through the other Asian markets that we've seen last week when we had that big selling days, and even bleed into the overnight sessions into the U.S.
What kind of stress are we seeing in these financial institutions that keeps this product running?
Yeah, so there is also some pressure showing inside the large machinery that keeps these products running. So CSOP lists over 20 counterparties in supporting the products, and including the major Wall Street firms. So for the banks that offer these equity swap exposure to CSOP, because exposure has gotten so big, they're also facing funding capacity. They're turning away some other hedge fund clients' requests to have these equity exposure, and also charging clients more for it. In other circumstances, they also reaching out to some asset managers that have investing ID in Korea, asking them to buy directly SK Hynix shares and offer the bank swaps instead. So this all shows that there is some balance sheet pressure for the banks. And on the other hand, the banks also need to find ways to hedge their own exposure to SK Hynix, for example. So, for example, the Click case, which is some of the banks that they ask asset managers or reach out to hedge funds for that kind of protection in an extreme down day for SK Hynix. The cost of that has also sharply rose over the past month.
Bloomberg Asia Equities reporter Charlotte Yang there, and subscribers get more on today's big take on the terminal or at Bloomberg.com. Well, Bloomberg Economics says the AI build-out, sky-high equity valuations and a ceasefire in Iran have improved the global economic outlook. As a result, it now sees global growth at 3% in 2026, fourth quarter inflation at 4.5%. But that picture would change if there's a major re-escalation of fighting in the Middle East. For more on that report, let's bring up Bloomberg economist Hyo-Sung Kwon. So the AI boom is a big factor in those forecasts, and one that's, I guess, sits obviously apart from what happens with the war and these peace talks. Are we seeing the economic impact already?
Well, not yet, but probably that if the AI bubble really collapses, then its impact will be significant, but probably not like 2008 style financial system meltdown, but more like 2000 dot-com bubble bust. So we assumed a 20% correction in U.S. equity prices and a pullback in AI infrastructure in the U.S. And combination of those shocks will push the U.S. economy to the edge of the recession. So our model says that U.S. economy GDP growth will be lower by 1.5 percentage point with a couple of quarters of contraction. Globally, the impact would be 1.3% of global GDP. It is 1.6 trillion US dollars, the size of the Switzerland economy. A drop in investment and weaker consumption would weigh on the economy, but tighter financial conditions through higher credit spread will be more damaging.
In that bear case scenario, would the biggest beneficiaries of the AI boom also be the most vulnerable if we see the bubble pop?
Yeah, definitely. You already pointed out that those beneficiaries like Taiwan and South Korea will be most vulnerable because those two countries are highly embedded in AI infrastructure, supply chain through semiconductors. Taiwan is most exposed. Taiwan's economy grew almost 9% last year, and I expect the economy to grow more than 9% this year. The main driver will be definitely the AI boom, and the TSMC is at the center. And South Korea is a little bit more diversified, but Samsung and SK Hynix are likely to make operating profit around 20% of South Korea's GDP this year. So that's a lot. So if the AI bubble collapses, then it will hit the economy by hit the export and investment and fiscal revenue. So the model says that it will hit Taiwan's economy by 4% GDP, and South Korea a little bit more diversified, but still around 2% of GDP is at risk.
Bloomberg Economics Korea economist Hyo-sung Kwon. Let's also turn to more news when it comes to the artificial intelligence build-out. Meta shares closed higher after sources told Bloomberg is developing plans for a cloud infrastructure business that will sell access to AI computing power and models. One potential plan is set to include selling access to AI models hosted on Meta's existing AI infrastructure. Such a move would position the company to compete with industry leaders such as Amazon Web Services and Microsoft Azure. Bloomberg's been told that Taiwanese prosecutors have detained 2 Supermicro computer employees over alleged shipments of NVIDIA chips to China. A source says 2 other Supermicro staff were released on bail, but barred from leaving Taiwan. Investigators raided the offices of Supermicro on Monday, along with 2 other companies and 6 homes. The company says it's cooperating with authorities and is not the target of the investigation. We have more ahead on the Asia trade. This is Bloomberg. South Korean fashion retailer Musinsa is rolling out an aggressive store expansion in Asia as it seeks to challenge Uniqlo and build momentum ahead of a closely watched IPO. Speaking to Bloomberg exclusively, Co-CEO Nam Cho told me more about where they see growth opportunities in the region.
I think the biggest needs and the interest that we're seeing is currently in Japan, as well as China. So those are the 2 markets that we're mainly targeting in our current stage. But we're seeing trends or interest coming from Southeast Asia, as well as U.S. and European countries as well.
What is right now the ambition in China? How many more stores? What part of your revenue do you want it to be?
We currently have 5 stores open, actively working in China. We're hoping to increase to up to 10 stores by end of this year. We're hoping to have, we have an ambitious goal to open up to 100 stores within the next 5 to 6 years. I think the actual the revenues that we cannot specify at this point, but we are expecting, pretty big and fast growth in China.
That's pretty ambitious. Are you at all concerned about the geopolitics perhaps behind it? It wasn't long ago that Chinese boycotted Korean stores because of geopolitical issues around the U.S. THAAD missile defense system.
That is correct, and I think the risk is always going to be there. But we have 2 things that we can think about. One is companies like Uniqlo. Japan also has had not always the best relationship with China. Still, when you have a very good product and good connections with the consumers, that your products and your stores can endure some of those challenges. The other thing is that's why the partnership with ANTA is very important. I think especially in countries like China, having a good understanding of the local cultures, having a good relationship with the local officials as well as the governments or the local community is very important. So we're learning that from ANTA, and then they're helping us find good commercial venues for us as well. And I think with that close partnership that we will be able to mitigate some of those risks.
We're seeing also more growth of Korean products in the North American market as well. Do you expect to be there?
Yes, we do have a goal to enter the U.S. market. U.S. is obviously one of the most biggest market in a global setting. And I think our goal is to eventually get to the U.S. market, be able to open our stores and to do more business in the U.S. for sure.
What's the timeline?
We don't have a very specific timeline. We're thinking about focusing on China and Japan. That's kind of our first stage. Next will be Southeast Asia, and then maybe perhaps Middle East next year. So the best estimate that I have is probably at least 2 to 3 years from now.
So when do the IPO plans come into place? That's before the openings in the U.S.?
Unfortunately, I cannot discuss the specific time for IPO, but obviously IPO is a very important milestone that we're thinking very strategically and making sure that we're preparing for it the right way. But yes, I think it will probably happen hopefully before the entering of the U.S. market or expanding globally.
Has the market volatility that we've seen in the Korean market altered or given you second thoughts about your listing at all?
I mean, it's obviously a very attractive market right now, and I think that's why I think we would definitely consider going IPO in Korea. We're also thinking at other markets as well, but obviously currently Korea market is one of the most attractive market. So yes, definitely that's something that we're considering for sure.
I didn't know that you were considering other markets as well. What are some of the criteria that you're evaluating?
Obviously, as a company, wants to go global. We want to make sure that we're being valuated at the fair price, and we believe that U.S. market is obviously one of the best markets to accomplish that. So obviously, U.S. market is definitely something that we're considering. But as you were mentioning earlier, Korean market currently is doing very well. And I think Korea, not just to Musinsa, but for any company, probably one of the most attractive market to potentially IPO in.
Musinsa Co-CEO Nam Cho there, as we'll be watching the Korea market at the opens as well as here in Japan and Australia headed towards that opening in just a few minutes. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we brace for the June payrolls numbers out of the U.S. Of course, Haidi, that will have implications for where the Fed goes from here. But we saw another tech sell-off in the overnight session.
Yeah, and that will really kind of be the big determinant when it comes to the Japan and Korea and Taiwan markets, right? But you mentioned those labour market numbers. That'll feed through to the conversation about inflation after these comments we had from Fed Chair Warsh. Elsewhere, though, we're looking at like quite a bit of calm when it comes to at least the geopolitical side of things. Some of the constructive comments on these technical talks leading to a third day of losses for oil, at least, Shery.
Yeah, President Trump saying that they had some very good meetings in Doha. In the meantime, of course, we're watching those energy-related stocks here in Japan as well. Very dependent on oil imports from the Middle East, but we are seeing those supplies coming back up and normalizing really fast. In the meantime, it's all about the tech story right now. We had in the overnight session, Meta, we understand, is now building a new AI cloud business that could have implications for competitors there. Apple suppliers, we understand, are also thinking of buying from China when it comes to memory chips. So all of those sectors in the Asia session will be on watch today. The Nikkei falling 0.6%. Losses after 3 sessions of gains, a little bit of consolidation. We're already at a 1-month high. The Japanese yen, 162, is the level. We continue to be around the 40-year lows against the U.S. dollar. Of course, we have heard from the chief currency official, Mimura, here in Japan, defending past interventions as effective, also highlighting communications constantly with the U.S., but we're not seeing any let-up when it comes to this weight on the Japanese currency. We're watching also the pressure on JGBs because we do have a 10-year auction today. Do see how the open in South Korea is also unfolding because, of course, when it comes to tech, when it comes to Apple suppliers, memory chips, it's also about South Korea and the Kospi now losing 5%. This is the second session of losses after losses of around 3% in the previous session as well for SK Hynix, and we're seeing now the stock trading at a 1-month low together with Samsung Electronics. The Korean won also weakening against the U.S. dollar. We have data in the last few minutes about inflation also coming through higher than the BOK's 2% inflation target. So that's another thing that this economy, Heidi, needs to contend with.
Yeah, and taking a look at the flip side, of course, when it comes to some of the pressures that we continue to see on currencies like the yen, it really is this dollar dominance, this subsurgence back to the greenback, right? And what we're seeing when it comes to treasuries as well, responding to those comments from Kevin Warsh about how he views the inflation picture, which of course is ever changing, given that we still have a great deal of uncertainty of where the energy crisis is going to settle. But it's certainly making, progress in the right direction. Hence, we heard those comments from Fed Chair Warsh saying that these price risks have come down and that commitment to price stability as well. When it comes to Brent crude, you could see that picture being reflected, a third day of losses being held by oil markets there as we continue to see that steady flow through to through the Strait of Hormuz and these talks continuing as well, the technical talks that go on in the background. The setup for Australia, as we're just a couple of minutes into trade, not so positive. In fact, extending losses for a third session. We finished yesterday at the lowest level in about 3 weeks, and things are falling, particularly given we do have a lot of energy-heavy names in this market. Let's bring Hartmut Issel, who's the head of APAC Equities and Credit at UBS Wealth Management. Hartmut, great to have you with us. And it's at the time of year where we start looking at what the second half of 2026 might bring, right? Do you expect this really impressive, exuberant level of AI investment and the rally to continue?
Well, if I start at the top, right, basically the end demand, right? We look at anybody's cloud revenues, whether it's, by the way, hyperscalers in the US or whether it's in China, right? They're all accelerating, right? So am I worried about demand for AI-related services? No, not really that concerned about it at all, actually, right? Because of the acceleration. Then the discussion, of course, that happens is what about within the tech space, right? What about semiconductors versus hyperscalers? Semiconductors is also clear, right? They had a very, very strong performance. At the same time, nobody's really going to cut their capex either, right? So we have actually in 2 steps recently taken the weight in our selections a bit down for semiconductors, but doesn't mean we're going out of it. In fact, we're slightly overweight still, so that's fine. For the second half, yeah, there may be a bit more rotation, but we'll watch it very carefully. But again, overall, the demand for AI, there's absolutely no sign of any let-up.
What are some of the big risks that you see then?
I don't actually see that many risks, right? Because we're looking at every company, especially also outside tech, right? Take our own company, take other financial companies, take healthcare, take travel agencies. Everybody is looking into how they best utilize AI. So that's really not so much the risk in my view, right? What you could see here and there, maybe towards the end of the year, etc. Right? The hyperscalers, they have really ramped up a lot their capex spending, and some investors are worried about it, right? That this flattens a bit out without actually coming down, but flattens a bit out, and then we see, but again, more of a rotation rather than everything coming down. This is how I would look at it for the second half.
Do you worry about the geopolitical risks anymore? Because it looks like certainly crude markets and even policymakers are starting to assume that the inflation woes being created by the energy crisis are now a thing of the past.
Yes, I would agree with that. And it has always been our base case, right? The timing has taken a bit longer than everybody thought, including us. But generally speaking, that it goes this way, right? That the US has a midterm election coming up early November. And of course, you need to see what, on your voters' side, right? What the oil prices or the fuel prices are doing. And also for the Iranian side, right? So high oil prices is one thing. If you cannot ship them out, you're not actually generating revenues that you also need, right? So that ultimately, right? It's not an even path, but that ultimately both sides have an interest to bring this to a settlement, which now seems to be the case, is probably not that surprising. And should, there's also therefore no reason to say, oh, geopolitics, we need to be very, very risk averse here.
Where do you expect to see the further upside in Asia? You've said ex-Japan. China is perhaps, one where there's a bit more opportunity in terms of having less of a rally in the tech space. But where do you see things being spread geographically?
Yeah, I mean, for our region, yes, you're right. China, especially also the tech side, actually semiconductors, like in the US, right, they have actually also done well. The hyperscalers, the bigger market caps, not so much. That could also be, the shoe could be a bit on the other foot also in the second half. And then, as you rightly said, there are other drivers, right, beyond AI. So value ups is something that always comes to our minds, to my minds, right? So we have these programs running in Japan. We have them, of course, here in, where I sit, in Singapore. We have them in Korea. And recently, that's also interesting. We had actually a call with the stock exchange representatives from Indonesia, and even they were talking about, yeah, maybe we're looking at value up. So this is something that spreads, and especially APEC specific, right? We like this driver as well because it helps the stock markets to go up. We're seeing the evidence already.
What about the currency impact? Do you see a meaningful impact for the Japanese markets, for the Korean markets, with the weakness, particularly in the yen?
Yeah. Well, actually, if you put it on the stock market side, it's actually not so bad, right? If the currencies, let's say in those cases where it applies right now, a bit on the weaker side. Actually, for exporters, that's not a bad thing. But currencies in general, if I look across also our region, right, and we have a bit of a different view. Right, the market has also very recently told us we're looking at 2 Fed hikes here. And given also the geopolitics that we mentioned, and therefore energy prices, some other factors, we don't think the Fed actually needs to really hike, or certainly not this year. And next year, actually, we see it almost on the other foot again. We wouldn't be surprised if it even comes down to some extent, right? So then you have a bit of upside here, single-digit upside maybe for several of the APEC currencies.
Where do you see upside for currencies? Because at the moment, things are looking pretty dicey, particularly across the EM space.
Maybe let me pick one here where we see upside. I give you a number, 650. That's our forecast over 12 months then for the CNY, for example. I mean, the PBOC is more or less already, they have loosened and eased for a long period now, right? How much more can you go? And on the other side, right, and then also the exports, right, is also clear the valve, right? If you have that strong export, the valve that usually also closes it a bit is a currency strength. And if then, as we believe, ultimately the Fed goes, so the other side of the currency pair goes a bit softer, that's where, for example, in this currency, in this particular case, have the upside.
What do you see in terms of some of the valuations that we're seeing, right? Because at the same time, we're also looking ahead to potentially a lot more fundraising within the AI space. We've obviously got the SpaceX IPO behind us now, but there's several other companies as well as other secondary fundraising rounds that we might see. Is a risk of investor fatigue and liquidity shrinkage, if you will, a little bit higher as he head into the second half?
Mm-hmm. Yeah, it's a very good, very valid question. What we have observed is that many investors, they look at it in absolute levels. Right? So how much money comes into the market? Fair enough, you can use that as a first indication. But what you actually need to look at, how much money is in there, right? So what's my market cap, etc. Right? Actually, on these levels, even though the absolute numbers, they do also historically not look low. I'm not saying that, but in terms of market cap, where now the market cap is, or money also in the market, is not actually that high. I think we have a 0.3%, right? So actually compared to previous cases where it became an issue, is actually a lot lower. So probably not a main issue. And then as long as the Fed also doesn't give us a real cycle in terms of going up, that's usually when the multiples fall. We don't see that.
Hartmut, always great to chat with you. Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Shery.
And take a look at how we're trading in the Korean session, because we're seeing the Kospi falling more than 5%. It's now activated a sidecar to halt Kospi program selling. The Korea Exchange really seeing all of this volatility, activating its sidecar to slow algorithmic and index arbitrage trading during sharp market moves. The next level that we're watching is perhaps at 8%, but we could see a 20-minute trading halt, all to do with this huge sell-off that we're saw in the overnight session on Wall Street, especially around the Philadelphia Semiconductor Index, which lagged about 6%. We had also news that Apple is considering Chinese memory suppliers. Of course, that would have a big impact for the South Korean giants, Samsung Electronics, SK Hynix, both falling more than 6%. This is Bloomberg. now breaking news, the U.S. SEC is said to be looking into Susquehanna's allegations that unknown insider traders made $100 million on the options bets. This is according to people speaking to Bloomberg, saying that this was ahead of a recent Chinese regulatory crackdown on cross-border brokerages. Susquehanna went public with its claims in a lawsuit on Monday. And the U.S. SEC now is examining the trades described in the market-making firm's complaint, and Susquehanna saying that it's lost more than $70 million as counterparty of most of the alleged insider trades. Right, we'll get you more on this story, but Haidi, the SEC now looking into Susquehanna's allegations at the moment.
Yeah, we'll get some more details, hopefully, as it comes to us. But, Shery, Bloomberg Economics taking a look at the broader economic outlook, given elements such as the AI build-out, sky-high equity valuations, a ceasefire in Iran, all of this adding to an improved global economic outlook. And resultingly, it sees global growth coming in at 3% for 2026, fourth quarter inflation at 4.5%. But that picture would change if there's a major re-escalation of fighting in the Middle East. Let's get more from one of the authors of that report, Chris Kennedy, joining us from Washington. And we see a third day of declines for oil prices. We're almost normalized, essentially, to sort of pre-war levels. Markets are certainly essentially trading as though we're not going to go back to those levels of volatility. Is that the assumption that economists can make too?
I mean, that is the key assumption here. So we're definitely in a world where physical oil is, again, very available on the global market, and oil prices reflect that, both current physical trade and then near-term futures trade, so around $70 a barrel. Whether that can be sustained, I think, depends on the next few weeks. What we're seeing is that traffic is continuing to flow through the Strait of Hormuz, getting those barrels out of the Persian Gulf. And the U.S. is continuing to export substantial amounts of oil, other economies as well. Some of that's going to pull back soon. We're going to see, we're seeing inventories in the U.S. in particular continue to drop. Those emergency reserves are going to run out. But if things stay where they are, we can expect that oil prices will normalize about where they were, about where they are right now, which is close to where they were pre-war.
So how long will it take to feed through into the inflation data and growth?
Yeah, so at Bloomberg Economics, we've projected that most of the world has likely seen peak inflation in May. We're still waiting for data to come in. But that represents a pretty significant shift from our projections back in March. Right now, if oil prices stay where they are, I think you had it on the graphic, we're expecting inflation to come in between not 3 and not 4 percentage points lower than what we had previously expected. That's assuming $70 per barrel of oil holds. Now, of course, if the price of oil jumps again because of renewed tensions in the Strait of Hormuz, that could change.
The other element that, we sort of haven't spoken about for a while with the fixation on the supply side is the demand, right? Lower inflation in China and Japan specifically. How does that play into the broader assessment?
Yeah, so when it comes to China, of course, I think we're still trying to figure out on the oil side what has really happened, because China's demand for oil did drop considerably once the war began. Some of that is clearly they were building up inventories. They paused some of that. They maybe engaged in some pretty aggressive demand control and release of commercial inventories. Japan's a slightly different story. We have better information. And of course, Japan was hit pretty hard by rising prices. So we might have seen a little bit more aggressive reduction in demand, or demand destruction, as it's called in the commodities industry, than perhaps we expected. But we do see that our projections are that both countries are going to see a boost in growth as a result of this lower projection of oil prices. In the case of Japan, we're expecting about a 0.2 percentage point increase in growth projections compared to what our baseline was in March. In China, it's closer to about 0.15%.
Chris Kennedy, economic statecraft lead at Bloomberg Economics. Now, here in Japan, Prime Minister Sano Takaichi has started her trip to India. She's on a 3-day trip, including a summit with Narendra Modi as the two countries try to reduce their dependence on China. For more economy and government reporter Yoshiaki Nohara joins us now. Yoshi, I mean, we know that a lot of these critical sectors are on the table for discussion with their Indian counterparts. But given both countries' reliance on China when it comes to critical minerals and, of course, the relationship also frayed between Tokyo and Beijing, how much is at stake in these conversations with India?
So Takaichi has emphasized that how it's getting increasingly important to have a healthy and strong relationship with India. And that is because, as you mentioned just, Shery, that everybody knows that Japan's relationship with China has been strained due to her remarks on Taiwan. And that is why she needs to try hard to force a stronger relationship with India and talk about how they can cooperate on the critical things such as critical minerals and semiconductors, leading to the stronger economic security partnership.
Tell us a little bit more about those potential economic cooperation projects and what concrete results we could get out of this summit.
Obviously, the hardest part, of all these talks they are likely to have is how they make it, substantial in terms of actually reducing their reliance on China, which is not easy at all, especially about rare earth. It's not going to happen overnight, and if they can do it, they would have already done it a long time ago. So it's likely to be more of a strong language to be announced about when it comes to actual content and power of those resolutions. I think they are not going to be as promising as those languages would suggest.
Bloomberg Economy and Government reporter Yoshiaki Nohara there. We have more ahead on the Asia trade. This is Bloomberg.
Nissan CEO says Chinese car makers are setting many of the industry's future standards with their technological advances. Ivan Espinosa also told Bloomberg that despite the weak yen making Japanese-built vehicles cheaper, Nissan remains committed to producing vehicles in the US.
We will continue the strategy that we have set in the U.S., which is building cars in the U.S. We have two very large manufacturing sites, one in Smyrna, Tennessee, the other in Canton, Mississippi. And we will continue doing that. So to give you some numbers, last year, January, around 45% of our product mix was built in the U.S. The rest was imported from either Japan or Mexico. And we closed the year with 60% of our product mix being built in the U.S. And we will continue doing that because it makes sense. With the current context in which we're living, it does make sense to continue investing in the U.S. and continue bringing more cars into North America.
Given the current tariff environment, I believe for every auto produced in Mexico, it's about $2,000 or $3,000 more. What are you doing with that? How much is being passed on to the consumer, and how much are you just absorbing?
Well, we have a very aggressive cost reduction program, which we started a year ago when I took over the company. And we are focusing a lot on the products that are built in Mexico because they are cost competitive, but it's true, they are currently tariffed 25%, which is it's making part of the lineup that we're bringing from Mexico difficult to sell. So we have a very strong cost reduction program on those vehicles because we do see an opportunity, looking at the pressure that the U.S. market has today in terms of affordability. We see that potentially some of the buyers could be moving into these type of vehicles. So we are working very strongly on making them more competitive so we can probably take advantage of that if you can.
Ivan, can we wrap it up by talking about China?
Sure.
How difficult is it to compete with Chinese auto manufacturers?
Well, China is a world of its own, I would say. It's a very unique ecosystem.
What makes it unique?
I think the technology, speed, costs they're moving at a very different speed than the rest of the world. And for me, it's important to remain present in China because I believe a lot of the future standards of the industry are being set by some of the Chinese players today. again, in terms of speed, in terms of costs, and in terms of technology. So for me, the role of China is twofold. One is, of course, continuing to produce and sell cars in China, because we have over 15 million users of Nissan products in that country. So we owe them product that is competitive and that is attractive for them. But at the same time, it's a place where you can learn a lot, and you can start exporting some of the methods, some of the processes and new ways of working that we have discovered.
Can you give us an example? What can we learn from what they've done? An industry right now that they seem to be dominating.
Well, one of the things is when you look at the products in China today, almost 80% of the products that are offered have autonomous technology embedded. And customers are now not considering to buy a car if you don't offer some level of autonomous technology. So this is just an example of what can happen and what we can imagine coming out from this unique ecosystem that they have.
Nissan CEO Ivan Espinosa speaking to Bloomberg Surveillance. We continue to watch the Korean markets. Of course, we had a sidecar activated just earlier. We are watching that 8% decline line as well for a potential trading halt for the Kospi. Samsung Electronics, SK Hynix both losing ground. SK Hynix seeing 2 sessions of losses. Of course, we have seen the SK Hynix leveraged ETF becoming the world's largest single stock leveraged ETF. But according to analysis, we could see potentially that move amplifying a feedback loop and amplifying those that volatility, not just in the stock itself, but also in the broader Kospi. We have seen inflation numbers out for the month of June as well, rising 3.2% year on year. That's above the BOK's 2% target. The Bank of Korea saying that July CPI inflation will likely ease from June's. Still ahead, we have plenty more coming up from the IVS 2026 Startup Summit in Kyoto. This is Bloomberg.
Take a look at what we're watching just about an hour into, half an hour, I should say, into the start of trading here in Asia. Quite a bit of downside there. The Nikkei 225 down by just about 1.7%. That sell-off in the US overnight, particularly when it comes to the chip stocks, has not really assisted sentiment at all. We're also gauging really some of the conversations around what the Fed expectations are, given Kevin Warsh's commentary on inflation overnight. Korea in particular, we're still down by just close to 6%. The exchange activating its sidecar mechanism to halt, I should say, because Korea's program selling there, as we see that volatility to the downside gripping this market. And even in Australia, which is sort of that energy-heavy market with oil holding losses for a third day, we're seeing more moderated losses of about 0.5%. That market is sitting, Shery, at the lowest in about 3 weeks.
Yeah, and we continue to watch the tech sell-off that started overnight, right, Haidi? And especially as we continue to see this huge hype around artificial intelligence, all of the investments, the fundraising that goes around it. Our next guest leads startup investments at the venture capital arm of MUFG, which manages more than $650 million in assets and has over 50 active portfolio companies. Joining us now from the IVS 2026 conference in Kyoto is MUFG Innovation Partner CIO Takashi Sano. Takashi, really good to have you with us, especially as we continue to see these exuberance around artificial intelligence. Everybody seems to want to invest in AI. How do you differentiate from what the hype is and a real durable AI business?
Yep, thank you so much. The AI is adapting into a lot of enterprise operation now already, including our group. And what's really different from the old one and probably the hype is really adoption. And AI itself is just, well, we can simply call it just a technology, but how you can utilize this technology into the operation and workflow is really different. So if you go up until the operation and workflow into the enterprise, and that is really real, and which is not easy to kind of replace once they adopt it.
So how is it changing the kinds of startups that you're looking at? Is it changing the innovation landscape when it comes to some of the opportunities that you're presented these days?
The opportunity of, first of all, startup investment opportunity has been not drastically changed, but because of the AI, a lot of startup, even it's not necessarily AI startup, but adapting the AI into the startup is creating nearly different level of value creation, and which eventually transform into a lot of different society, for instance, or industry transformation, such as in case of Japan, for instance, we have a lot of problem in the small business owner succession, and this can transform even with AI. So this kind of new, interesting, unique opportunity solve the social problem is driven, and this opportunity is coming up.
What's been interesting about Japan is that we have a lot of great engineering talent. And yet we haven't seen necessarily many of these unicorn startups that have become global leaders. Where do you think that gap is?
The gap is, first of all, the biggest gap is still the capital, and that's which I believe we will still need to play a lot. But the capital, the absolute number of capital in Japan is still limited compared to the places like United States naturally, but or even like India or kind of places where, let's say, similar GDP is. So, but this capital is now, the quality of this capital started changing, which is, of course, domestic capital is important, but at the same time, global investors started looking at Japanese startup or Japanese technology as a market. And this capital could potentially bring great Japanese talent into the global leader.
And we do have an administration here in Japan that seems much more focused when it comes to public-private partnerships and really investing in these strategic sectors like artificial intelligence and chips. How much are you seeing that actually translate on the ground with the support that some of these businesses are getting?
Yep, it's already transforming drastically, and the now current prime minister and also its government moves really fast than I think ever before, and the startup is now adapting into those changes, and we see a lot into the adoption, and also like government procurement is also changed by this regime. So I think it's very, very positive move going forward.
What about the culture here in Japan? You have talked before about bringing the Silicon Valley mindset into Japan. Do you think that's starting to happen, and where do you see more changes could be implemented?
Yep, I think definitely like a cultural change started happening, but it's not simply just follow the Silicon Valley way. I think we started trying to find out our own way, so Japanese way. So some of those Silicon Valley culture is really good, but at the same time, we are totally different. We are different culture, different environment. So bringing good pieces, which is more innovative, open-minded diversity about the Silicon Valley ecosystem, but at the same time we have precise, dense community for engineering and so on, and that part is something we are kind of merging now into together, which becomes the really like a unique opportunity, even looking at globally.
Yeah, where else are you seeing those opportunities? Because MUFG, of course, invests not only in Japan, but operates also in the U.S., Southeast Asia, India, I understand. Where are the bright spots right now?
Thank you so much. We invest globally, and all places you mentioned is very important. But what's unique about Japan is we have a lot of social problem to be solved now. And this problem is not new, but because of the AI innovation and a lot of adoption into the social problem for this technology, then we started seeing very unique opportunity in Japan. Not like Silicon Valley startup is not easily able to come to here to play around, but Japanese startup, Japanese founder can play with this leveraging AI technologies. So we are very, very bullish about Japan, US, India, those kind of places.
Right. I mean, we have seen Northeast Asia be very exposed to the artificial intelligence boom, and yet the likes of Southeast Asia, India, for example, lag behind. How is MUFG seeing this contrast, and is there any opportunities within this dichotomy?
Yeah, so I think AI innovation just started. Like we also committed with our group to spend and invest nearly like $400 million for AI and so on. And I think this technology is who do first and then who learn fast cycle, and this is really borderless. So we are doing this in Japan, but at the same time we are trying to do it in India, in Southeast Asia as well as a group. So then we learn, we will find the new learnings from those regions, and then we again concentrate it into the center again. Then we run it and we invest, improve the operation. So I think being at a global firm, and then this is something what we are trying to do, and also it's how we are acting is able to adapt many different places or countries.
Takashi-san, really good to talk to you, CIO at the MUFG Innovation Partners. We have more ahead from the IVS Summit as well. This is Bloomberg.
Well, Bloomberg's also saying that Meta is developing plans for a cloud infrastructure business to sell its excess AI capacity and models. This will put it in direct competition with Amazon Web Services, Microsoft Azure, Google Cloud as well. Bloomberg Intelligence saying Meta's cloud pivot could signal a longer road for AI agents. Our global head of technology research, Mandeep Singh, joins us now from New York. So how impactful is this potential strategic direction that we're seeing from Meta?
I mean, it is a big pivot. And, for a while we were debating, what is it that Meta is spending their CapEx on? And clearly their top line growth justified this CapEx spend. But now we know that, whatever model they were developing, it feels like there is a longer road to AI agent products, those kind of offerings using their own model. And so they're following the SpaceX league in terms of, renting the spare compute and generating revenue because we are in a supply-constrained environment. And to my mind, this is not very encouraging if you look at, Meta's own model development and what it means for that. But if it's short-term, then it's a good source of revenue. And we know it can generate up to $50 to $20 billion per gigawatt in revenue just by renting compute.
There's a lot of complexities to this business model, right? Is this part of, an eagerness to show investors some return on the enormous amount of AI investment?
Yeah, I mean, look at the stock reaction today. The stock closed up, 8-9%. And so if the stock is going up, then they can say, going forward, they expect to raise the CapEx by another 30-40% for next year. But if the stock is under pressure, then it becomes a harder story to sell in terms of, raising CapEx. So I think investors definitely like that aspect of generating some ROI. If you don't have an agentic product right now, at least show some ROI by renting compute, which is what SpaceX did during their IPO. Overnight, they became a cloud computing company. But, the margins for this business are not going to be like what Meta is used to with their ad business. So it's going to be dilutive to the margins. And if they're thinking about building this long term, it's going to take, 10 plus years before they can have 30% plus margins on cloud business.
I'm wondering how hypothetical this is, right? Because in the investment call in May, Mark Zuckerberg did say it was on the table, but he said that, it wasn't necessarily a priority because he thinks that as a company, they have a use for that compute. It's obviously also the strategy that they're going to hoard as much as they can and work out how to use it later, right? So is this more hypothetical, or are they really looking to now carve out a portion of that for the business?
Yeah, I think right now every hyperscaler is in the mode where they want to get as much capacity as they can, build it whatever they could, rent it from neoclouds. So the surprising element here is, Meta is renting compute capacity from neocloud vendors like CoreWeave and Nebius, and now they in turn are renting their own compute. And that's where, you could bring in that circular aspect of why they're doing it, with neoclouds when they have so much compute to rent themselves. But to my mind, if they're able to develop a model, frontier model like Anthropic and OpenAI, then all that compute can be used. The problem right now is their MuSpark model is not comparable to the leading models from other labs. And until that happens, they may not have the best possible use of their own compute internally, and that's why they're renting this out.
Intelligence Global Head of Technology Research Mandeep Singh there, and staying with compute and AI infrastructure, our next guest leads GMI Cloud, a U.S.-based data center operator that recently announced plans to build so-called AI factories in Japan and Taiwan. It's one of several players, including Amazon and Microsoft, trying to set up data centers around Asia. Joining us now from the IVS 2026 conference is Alex Ye, founder and CEO at GMI Cloud. Alex, it's really good to have you with us, but as I said, this is a crowded space already. So what gives you the competitive advantage?
I think the key is building the entire ecosystem, right? It's not AI Factory is part of the product line, right? AI Factory is a foundation that builds the large-scale GPU infrastructure. However, NeoCloud or AI native cloud is building an entire ecosystem, starting from the large-scale GPU infrastructure from H100s all the way to GB300s to Vera Rubins. That is the foundation. And then we have model services, or Jensen calls it token factories, right? I have seen a tremendous growth on that. Just on the last 3 months, we've grown 6,000% just on that product line alone. And we're also adding new solutions such as Agent Box, which is a agent infrastructure that can have massive inference and as well as agent infrastructure that sits on top of this Agent Box ecosystem, right? So in the end, it's really about ecosystem, because customers need not just GPU infrastructure, but they need open source models, they need closed source models, they need GPUs, as well as they need CPUs, VMs to support all the AI applications in the future.
We're seeing this on and off tech sell-off consistently in the last few weeks, given the concerns about oversupply of, say, data centers, GPUs. Tell us a little bit more about what exactly your customers want to see and where the demand is.
Yeah, there's not a demand issue whatsoever. I think it's proven in the last 2 years we've grown. The slowest we've grown is 3x. Last year was 8x. This year is 10x. And I think the world's moving towards not just pre-training, but post-training as well as inferencing. In the last 6 months, our customer base has shifted from mostly training focused to probably more than half are now inferencing, and that speed has continued to increase. But however, that is not to say that the training time is over. However, with more inferencing, with more data that's being generated, new solutions, new data, that's going to get feedback to the training clusters to train large and new foundation model that's even smarter, right? So I think in the future, it will be a multi-demand world where you would have training, you would have inference, and this is just on a high level of structure, right? You also have very subdomain vertical AI solutions. You would have multimodal directions, but of course they all fall under the training and inference category, but there's multiple threads that are increasing at an increasing speed at this moment.
So let's talk a little bit about what you're doing here in Japan, because you're now starting this $12 billion sovereign AI infrastructure initiative. Explain to us exactly what sovereign AI is referring to in a practical context. Are we talking about data security, veering away from U.S. cloud providers? What exactly is the edge that you bring?
Yes, that's right. So I started the first AI factory in Taiwan. That is a $500 million investment that actually are starting this summer. Right, it's in a couple of days. It will be online, starting to be online. And we actually doubled down to build phase 3 and phase 4. That will be a double of that investment in Taiwan. Additionally, what you mentioned in Japan, this is even a larger scale, 10x scale, even more of investments into Japan. And AI factory, so sovereign, what that means is, if you think about what AI factory and sovereign means, we're building the AI of internet. Just think about internet, right? And you don't want someone to control the internet on the other's hands, right? Imagine someone switch off your Wi-Fi, right? You don't want to give that control to someone else, and you want to have that under your own control, right? So whether it's data, you don't want that data flow outside of your border, right? Or that entire power, the switch, right? Which is the data center, right? Where the data is hosted.
Right.
You want to have that domestically. So yeah, so
Continue.
It's a data and a power issue that you want to have it domestically as to sending that outwards to someone else that controls your destiny. So I think that's what sovereign means. It's taking control back.
What about the hardware that will go inside this AI factory in Japan? Do you have more details for us? And when you see the landscape right now of chips, you're a close partner of NVIDIA, but at the same time, we're seeing hyperscalers make their own custom chips. How do you see this space evolving?
Look, I think we had this argument back in the days. It's like, oh, iPhone and edge device is going to be really strong, therefore the cloud spend is going to go down. But that's actually not true. If you look at what's happening today, the stronger the ASICs are, GPU's demand is going to increase. It's just separation of work and optimization, right? Some are really good for a particular purpose. However, GPU is general computing, right? General accelerated computing, and that is going to increase. So I would say ASIC will continue to increase the total demand of the entire pie, right? And so GPU demand is going to continue, which has been true. And also
Right.
all our capacities are mostly sold out, and we're building more capacity in 27, 28, and 29, which is the AI factory in Japan is doing, right? We're building all the way to 2030, and we're seeing demand is multi-year demand instead of just like, hey, we want this this year. We don't know anything about next year, but it's more a multi-year that extends beyond, 2029, even 2030.
Alex, super quickly, we're running out of time. You're coming from a cryptocurrency business into AI infrastructure. Are we seeing a repeat of history when it comes to these investment cycles, infrastructure buildouts, and what lessons have you learned?
Look, I think the cycle is very, very different, right? Currently, the utilization is at 98% our capacities, and these are not, again, to your last question, these are not a single year contracts, but these are multi-year, even 5 years, and the data center is even 10 years contracts. So we do see that demands are continuing to increase. And to your first question, right? People are using repurposing training to inferencing. You can see that with Meta, right? They're offloading some of their older generation of GPUs to inferencing, and we're seeing every single cluster that we have. We're seeing 3-4 customers chasing us for that capacity, and so this is really an exciting time. And so I would say this is very different from the .com era, right? Of basically building dark fiber, but no one is using it. However, all the GPUs are tapped out, right? And we're continuing to increase and build more.
Alex, we've run out of time. Great speaking to you, Alex. Yes, CEO at GMI Cloud. We have more ahead. This is Bloomberg.
top corporate stories that we're tracking this hour. And Bloomberg's been told that Taiwanese prosecutors have detained 2 Supermicro computer employees over alleged shipments of NVIDIA chips to China. A source says 2 other Supermicro staff were released on bail but barred from leaving Taiwan. Investigators raided the offices of Supermicro on Monday, along with 2 other companies and 6 homes. The company says it's cooperating with authorities and it's not the target of the investigation. Alibaba and its US digital payment processor have agreed to pay $600 million to resolve a federal investigation into the sale of illegal pharmaceuticals and controlled substances. The investigation found that overseas customers used Alibaba platforms to buy the products. The Chinese company says the settlement will bring stricter compliance to US sales by third-party merchants. BYD is poised to reclaim the title of the world's top seller of fully electric cars from Tesla, the Chinese automaker delivering more than 557,000 battery electric models in 3 months through June. Analysts expected Tesla to report quarterly sales of around 397,000. This is Bloomberg.